What's going on, everybody? Michael Silva here. We had ourselves a big rally off the lows today in the S&P 500. We're going to talk about that because that rally has been met with some skepticism, and I'm going to talk about really key levels to watch out for if we're going to be getting some follow through, but also key levels to watch out for if we continue to break down, and this ends up being what's known as just a short cover rally that eventually gets faded. All that and more on today's Stock Market Brief Show. Let's get into it. Alrighty, everybody, welcome back to the channel. Tomorrow, it's Thursday, September 28th. Let's take a look at our economic calendar. What do we got going on? One thing I've noticed is we got Jerome Powell talking, but that's right when the market closes. So if you want to tune in there to see what he's got to say, maybe perhaps that'll bring some after-market volatility. Okay, what else do we got? About an hour before open, we have GDP growth rate. Now, if I look at the major countries here on the calendar, we have a lot of inflation data coming in across Europe. So that could also bring some market volatility. And it's going to be interesting to see how this inflation data comes in, because if the yields have been telling us anything, we might be seeing an acceleration potentially in this inflation data throughout these markets. Let's take a look at the market snapshot here. So this market rally, as we talked about, can it be met with skepticism, or is there skepticism? My belief is there is yes, because why? Well, there's a couple intermarket aspects that we've been talking to and nailing on, and one of which is the 10-year yield. The 10-year yield has made a monster move. Are we getting some sort of a blow-off type valve move here? But this thing continues to chug higher as it broke out of this tight consolidation over here in this prior area of resistance, closing at 46.26, which here, if you're thinking of in terms of the 10-year yield, it's 4.62%. Now, when that happens, take a look here at how the 11 sectors perform. When the 10-year yield goes up, well, what does really well? Well, energy, right? Why does energy do good? Well, because typically oil, right, benefits from that rising yield there too as well. And we broke out of that little tight consolidation and we came back above this 92.50. That was prior resistance, and prior support. Yes, it can go a little bit higher and peak through as we've seen prior times, but we'll see here if this is the start of a bigger move heading to the upside. And as we talked about on the prior video, that's typically not healthy when you have energy stocks leading the way, showing the relative strength. Now, towards the bottom of the 11 sectors, what's here? Utilities. Utilities is more of a risk-off type sector. However, they're very rate sensitive. So it was down to 1.92% today on the back of this flying high yield. And take a look here at this stock, specifically one of the larger market cap utility names. NEE is the ticker symbol. That's NextEra Energy. This thing was down 8.23% in a single day. Make no mistake, that is a very large outsized move, which we've only seen that happen 3 times since after the pandemic. You can see where you happened right here. If you apply a rate of change one day, it was right here, more than 7.5%. Right over here in January, going into February, we saw the move down and we kind of consolidated, then saw the bounce a little thereafter. And then 2022, the beginning of 2022, where we did get a bounce and we started moving higher. And then we had a lot of that volatility, obviously, amongst other names during the pandemic kind of sell-off right there. So as yields are continuing to press higher, my question here is, are we starting to see some sort of capitulation take place in utility names and potentially even something like TLT as a proxy for bonds? Let's continue on and look at the dollar. The dollar also made a very aggressive move too. So from an intermarket perspective, we've been talking about a dollar that continues to go higher, yields that continue to go higher, right? To be very aware and cautious of that, because we had a very strong day, and yet the S&P 500 finished up relatively flat. Now, what's scary here is not only the rising yield and then also the rising dollar, but if you take a look at today's heat map, some of the big market cap names, they were actually down on the day, right? So Apple was down, Tesla was down, Meta was slightly down, Microsoft was relatively flat, but we had Nvidia and Google there that were up. And you can see, obviously, the energy sector was really screaming. So my question here is, okay, is this going to hold? Well, there's going to be some key levels to obviously watch. The main key level is just going to be the low of day. Why did we bounce here? Well, if we take a look at the S&P 500, we'll go into some of those key levels now. Before we talk about, the new daily expected moves and update you on that, I want to just point out that when you have that anchored VWAP from this March swing low, we now close basically 2 days on it. We pulled into this gap that we kind of watched out for. Didn't quite close it all the way, but just about. It depends on where you look to close the gap. Some people look at right at the top wick or the closing price. It was basically just a hair away from that. I'll be updating you here on these gamma exposure levels too. If I actually zoom in, I'll show you the updated gamma exposure levels as we kind of almost fill that gap. So where can we have a potential support if we keep selling off? That's 420. Now this right here, that's a hammer candle. Hammer candles are known for potential reversal candles. For example, like this hammer candle, right? We crossed back above it, boom, and we started moving higher. And that was after, a pretty solid down day right here. Well, we had a solid down move. We're starting to see a hammer candle, which basically represents, a lot of fear early on. But then we had that snapback rally, and that snapback rally got kind of hung up right there at that week-to-date anchored VWAP, as you can see that little line there. So as it stands right now, if we can start breaking above the high a day and recapturing the week-to-date, we can potentially see a very fast snap up to around that 432 level, which is the gamma exposure level. That's spot GEX, so this can act as a potential area of resistance up above us. Okay, so that would be the beneficial bullish side of this potential bounce. Start looking at that 432 area. Below us though, right, if we start getting back below 424, I'll just be a little bit more cautious that the low of day could be potentially breached, and then we could potentially go for that 420. Now, if I show you on the SPX daily chart, we did tag that lower channel and we were just about a couple dollars off, which in my opinion is basically tagging it because this is a $4,200 product over here. Okay, we tagged that lower weekly EM or just off of it, and we still have obviously that gap in just the prior area of resistance. Once resistance is broken, potentially becomes support, forming that hammer candle there, okay? Now, if I show you what took place today on the 15-minute time frame, where that rally took place today, take a look here. Has it tagged the lower daily expected move? Right. This is why it's important to know these levels. It doesn't necessarily mean that this is going to happen every time where we get this rapid move off of it. Sometimes we can break down and come back in. It's all about probabilities. That's what trading's about. And when you look at implied volatility, it's the options market telling you what they think is going to be risk for the very next day. So we're going to update you on what the market thinks is risk going into the next day. So what can you do understanding these levels? Well, you can maybe look at, if you were shorting, maybe you're like, okay, well, we're coming into what the market, thinks is risk to the downside, right? Or potential to the downside or upside, right? It's plus or minus. Well, you might be able to cover shorts there. Or if you want to go long, right? Maybe you want to start a position once you start to see some strength. For example, we had this reversal type candle here. It was a, long lower wick, small body after an authoritative move. And then we crossed, we had a high, and then we finally broke out right there. So this right here could have been a good entry where you play it up into the week to date or even the daily VWAP right around there with a stop under the low of day or even just below that weekly expected move. Now, if I update you on the 15-minute time frame, I just want to call out the overall trend still remains to the downside, right? So we're trending down. So yeah, it's exciting to see a little bit of a bounce, but that doesn't mean really anything at this point because these bounces, they can get faded, right? We saw this bounce, that got faded. We got that little bounce, that got faded. This move, right? And is it going to get faded? I don't know. But take a look at the week to date, right? The high right there. So if we start getting back above that as discussed, start to look at the 5-day moving average from a shorter time frame, right? Could get hung up there to 429 is the upper for the daily expected move. And then as far as the lower daily, it's kind of in confluence with the lower weekly expected move right at about that 422 level and some change. Okay, so that's kind of the key levels that I'd be paying attention to going into obviously tomorrow. Overall, right? Hammer candle, potentially pretty good. Although it's a little leading with skepticism here because of the intermarket aspects. So what would really benefit a rally right here would be probably the dollar coming off a little bit, the 10-year yield coming off a little bit, and maybe tech, right, participating obviously in the rally, which could really help bring up the S&P 500. If we take a look at a couple indicators, right, we do have that positive divergence building here in the NASDAQ 100 when looking at the bullish percent index. Okay, so that's in the works right there. And then the BPSPX, it's about matching lows right here. And this is obviously a lot lower low. So we do have a very oversold territory in regards to the bullish percent index, RSI, with a subtle positive divergence currently in the works. That's all I got for you on today's episode, everybody. Like I said, just to really quickly recap this market rally, right? It's as exciting as it is. There are still some red flags. However, the idea of potentially being bullish makes sense here if you're paying attention to those key levels as explained, breaking above that week to date, maybe potentially 432 as resistance. And then we talked about the other levels below us. See you later.